Good afternoon. Today is Monday, May the 8th. The time right now in Singapore is 12:25 in the afternoon. Now, let's do a bit of recap as to what Wall Street did last Friday. We know last Friday we had the non-farm payroll release. It was a much better result than the market expected, which actually excited the which actually turned the market around because just before the FOMC and the non-farm payroll, we see that US equity has been falling, and we can see the Dow Jones, the market hit a low on Thursday night, just before the FOMC meeting, to a low of just under 33,000 before it rebounds strongly to 33,748.4 after the result of the non-farm payroll were released. It was a lot better. So we can see the market was actually very buoyant. So this momentum that we see on Friday may actually continue forward into today's trading. So possibility the market may actually take out last week's high at 33,811 before challenging this other high at 34,342. Now, if you look back, this area is actually an area of major resistance here, which actually we saw it was a February high. So the immediate barrier to higher level will be this level at 34,342.3. Okay, so there's a very good chance it would actually challenge those levels. Now, if we have a pullback, assuming the high at 33,748.4 is a high for this round, if the market pull back 50%, that will be an area of buying opportunity. But again, you have to be based on the appearance of a reversal signal. And for all we know, this market may actually continue to charge forward without retracing. Okay, so in the S&P 500, we saw the same thing. The market have a three-wave pullback from a high of 4,186.9 to the low of 4,048.3, and we have a very quite a robust counter trend rally, and this actually create the condition for extension of this rally that we saw on Friday to challenge the February high of 4,195.4. So this has a very high probability of happening. And if it happens, the next level of interest to me is going to be somewhere between the 4,370 to 4,520 level. So we can see that if this level is taken out, the upside potential is another couple of hundred points beyond the 4,002 levels. Okay, so in the Nasdaq, we can see that for this year, we can see Nasdaq has been leading the pack higher. In fact, so much so that on Friday, it actually registered a new high for the year in the cash index at 13,291.1. So this is actually laying the foundation for another assault beyond the immediate level of 13,721. So if this level is taken out, then of course a more realistic level is market will actually challenge 14,135 to 14,715 levels. So we can see upside there's going to be quite a bit of a momentum left, maybe another, who knows, 800, 900 points left before the market exhausts itself. Over in Asia, we can see after a week of on-off holiday, the market resumed in Nikkei. The high traded was on Tuesday, last Tuesday, I mean, at 29,278.8, and the market pulls back from there. And it's no surprising because this market is a three-wave equality level at 77 to 29,466. So if the market pulls back from here, I am in no way surprised. But if the market should go beyond 29,500, the next level of interest to me will be 29,705 to 30,431. So you can see the upside, there's going to be many layers of barriers in which the Nikkei will have to climb to get out of this rut. Okay, so over here we can see that in the Hang Seng, things are a little bit lethargic. We can see the Hang Seng, although it rebounded this morning, currently is facing its first challenge. The area between 20,300 to 20,500 is going to be the immediate barrier to higher prices. And if it struggle around here and pull back, that will be no surprise because the market does seems to want to come down. And if it continue to go up, again, the next barrier of a potential barrier to higher prices will be 20,800 to 21,100 level. So you can see that beyond this immediate barrier of higher prices, then the next layer is going to be just around the corner. So by and large, the bias is to the downside for the Hang Seng. So we see in the mainland equity index, the CSI 300, this morning we have a run up to 4,070, and this is understandable because the Chinese market has been off for one whole week, and this is about the first time it actually reopens in a full session. So the rush is to catch up on what the Dow Jones has been doing on Thursday and Friday. So the 4,070 is what we see this morning, and this bracket is going to be a challenge because within this bracket is an area of potential resistance. 4,047 to 4,076 is going to be an area of interest to me. If it cannot surmount this level, it may actually pull back down. If it does so, then the more likely area in which you want to go long is going to be at 3,760 to 3,940 levels. So by and large, it does look like upside is quite limited. It may actually pull back down, and then once the market hit these levels of prices, then we will look out for buying signal. Over in energy market, we have a mysterious drop in WTI crude oil prices to $63.73 on Thursday, followed by the major reversal that you can see over here that caused the market to extend even higher this morning to $71.86. So if the market tops out around current level, if it does pull back, assuming the high $71.86 hold, then the area of opportunity is going to be somewhere between $66.83 to $67.80. It may not pull back at all, but if it does pull back, that will be a great area to actually pick up some long, because I think the crude oil prices looks like it's going to reverse, okay, because of this major reversal pattern that we saw on last Thursday. So the immediate target is probably going to be somewhere between $76.88 and $79.14 before challenging the December high of $83.32. So we can see that there is actually a bullish buy setup, assuming we do get a chance to buy at the more ideal price, or the 50% pullback from where the $63.73 low was to the high of $71.86. Over in gold market, at the same time where gold mysteriously dropped to $63.73, we also saw gold surge to the all-time high of $2,081.46. This is an all-time high, okay? So now, that also followed by a major reversal pattern, just that in gold, it is the exact opposite direction that caused prices to come down all the way to below 2,000 before rebounding somewhat. Now it's trading at about $2,024 thereabout. So if the market do rebound back into this range of prices, $2,040 to $2,050, that will be an area of selling potential. So do look out. But I think the near-term support is probably going to lie somewhere between $1,943 to $1,975. So if you are prepared to do this counter trend trade, this is all that you can expect for the time being. I think in terms of timing was, I think this decline in gold has a potential to decline all the way throughout the remainder of May, all the way to early June. Okay, because remember what happened in early June is where the debt ceiling has to be resolved, because by then the US Treasury estimate that they will run out of money despite all these financial wizardry that they are doing. Okay, so I think in terms of timing, it coincides with the debt ceiling resolution. This time around, maybe they are not going to be able to escape, because there doesn't seem to be any kind of compromise from both parties of Congress. Now we can see that in silver market, the market is not as weak. The market did rally to a high, but not an all-time high, to $26.14 thereabout on Friday, before coming down aggressively about almost $1 to $25.17. Now we have a bit of a rebound. This rebound so far is 50% of the entire drop from $26.14. We will see whether the market want to come back down. If it does come down, it does maybe will be able to find support somewhere between $24 to $24.30. Okay, so do watch out for this level. Okay. Over in the dollar, we can see the dollar index has been falling since mid-March, and it does looks like it is going to continue to fall. And we can see that the most recent rebound on Friday to 101.55 now is losing steam, and this was an area of selling opportunity between 101.13 to 101.55. So market now is trading just below 101, and it's likely to continue to extend lower to somewhere, I would think, going to be somewhere between 99.64 to 100.12. Okay, so this is going to be temporary weakness in the dollar, and if the dollar is going to maintain the weak posture. That means to say all currencies like to rally, and that is very evident in the sterling versus the dollar pair. We can see sterling actually went up to a high on Friday at 126.53 and is currently challenging this level as we are speaking. So upside potential is likely to be somewhere between 127 to 127.5. Okay, so this is an area of a potential area in which selling interest may re-emerge. I, for one, is looking to take profit about 127.35 levels. I'm basically long sterling right now. I have no position in the euro dollar chart. You can see that the euro dollar is struggling. It does not have a new high compared to, let's say, the sterling itself. So in the near term, maybe it will play catch up. If we do get a rally in euro versus the dollar, it's actually a potential sell setup. The market going to go above 111. The area of opportunity to me is 111.26 to 111.69. Are we looking out for sell signal within this bracket of prices? And I will be more than keen to do so if I do get the sell signal. Okay. Whereas in the Aussie versus the dollar pair, yes, the Aussie has been very, very firm this morning. 0.6774 is currently where it traded to the high, and it may extend it all the way to its target price of 0.6816 to 0.6873 before we see any kind of correction. So, but in the meantime, if the market do pull back, then this is an alternatively, 0.66 to 0.6675 could be a buying opportunity, but it doesn't look like it will pull back first. So for the time being, I don't see any trading opportunity here that actually warrants a good trade here. So there's no great setup here. So I'm going to watch and just leave it aside for the time being. Whereas in the dollar versus the yen, we may get a sell signal very, very soon. We see that the high traded this one was last Tuesday at 137.77. It dropped all the way to 134 levels, so 133.50 before it rebound. Now, if this rebound can extend a bit higher to somewhere around 135.65 to 136.15, that will be a great area to position short on the basis that we get a sell signal in the lower time frame. So because I think over time, we may be able to see dollar yen go back to challenge the 129.65 levels. Okay, so there's going to be quite a meaty potential here. So in terms of risk reward, I think dollar yen is a much better play than, let's say, the Aussie. Now, for that matter, it's even a better play against the dollar versus the Canadian, because the dollar Canadian has been falling very sharply to this morning low at 133.70 without any rebound from the high of 136.40. So we can see this sharp drop here doesn't give us a lot of room to actually do a trade, because of the sharpness of the drop, then the rebound is likely to be very, very shallow. So if the market going to rebound from where it is currently trading, at best, I think the market may only go up to 134.30 to 134.70 levels. And also, even if you manage to sell, the potential is not great. The market, I think, will be finding support somewhere near the 132.75 levels. So in terms of risk reward, this is a terrible trade setup. Okay, so again, I won't be looking into the dollar Canadian, whereas in the Bitcoin may offer us a bit of an opportunity. We can see that recently the $30,000 level has become a major barrier for players. We have seen on Saturday the market actually attempt one more round, but the best it could do was 29,851 before it pulls back to currently trading just above $28,000. Okay, so by and large, you can see the lows are getting shallower, okay, relative to the previous high. I mean, the highs are getting lower and lower, but it's not that much lower compared to the previous high. Whereas the lows are getting significantly higher from 27,000 all the way to 28,000. So we can see that if the price continues to dip lower, I am already long, but I placed my stop to my entry level. So if the market goes below my hit my stop, I will get out of my long position with no risk at all, but I'm still prepared to go long if the market can still extend a bit lower to 27,000 to 27,556, again on the condition that I do see a reversal signal within this bracket of prices. So this is all I have for you, and until tomorrow, I will see you. Bye bye.